all right, guys. Let's do it. Good morning, good afternoon, good evening. Depends on where you are connected from. My name is Emmanuel Adigbola, popularly known as the Forex Apostle, and I am called Forex Apostle because I'm a minister of the gospel. I trade Forex market for a living, and I disciple others in Forex. So today, I'm so excited to have our guest with me, and I'm not going to waste or take any of our time at all. But do me a favor, okay? Make sure you type in your name, your location, where you are connected from. I'll be able to, acknowledge you, and make sure also that you type in your questions at the chat window, because our guest is going to be, doing justice to all the questions. If you are a business owner, if you're dealing with cryptocurrency, you're dealing with Forex, even stocks, you don't want to miss any minute from today's show. So without any further ado, let me bring in our guest for today, Mr. Thomas. How are you doing?
Hey, how are you?
I am so fantastic. I am wonderful. So I'm not going to take any of your time. So it's your show.
Awesome.
Over
All right,
to you.
guys. Let's jump in. All right. So let me get the slide up. Awesome. All right, guys. So today we're really going to talk a lot about Forex trading and U.S. taxes. We're going to get a lot into funded Forex trading, and then we're going to get into Forex trading as well. Obviously, some of the concepts that we're going to go over with Forex trading can be said to apply to business owners as well. Obviously, we'll speak about the funded Forex aspects of it. However, there may be things that we discuss that also pertain to other business owners. So just keep that in mind. All right. So just a little disclaimer here. The information provided today is for educational purposes only, and this is not financial advice. If you need to speak to a tax professional about your specific situation, then reach out to me. The information provided today pertains to U.S. taxpayers only. If you're not in the U.S., please seek a knowledgeable professional in the country that you pay taxes. So again, everything that we discuss here is going to be related to United States tax returns. Tax laws change and sometimes change often. If viewing this presentation after today, so I don't know if it'll be up, but after today, please note that things discussed may no longer be applicable. So again, Congress changes tax law all the time, and what we discussed today may not be applicable in the future. All right. So a little bit about me and my services. I am the founder and owner of Traders Tax Pro. So although I help participants of the Forex, crypto, and stock markets, I'm also able to assist any U.S. taxpayer with their tax return and bookkeeping needs. I am an enrolled agent, which is the highest credential provided by the IRS. So this basically means I'm enrolled to practice before the IRS. My client portal makes things easy as a fully virtual tax professional. So my client portal includes things like secure chat, document upload, e-signature, and so much more. So this makes it easy for anybody across the country to use my services because we are able to do everything virtually. There's no need for an in-person meeting, in-person signature. Everything is done fully through my client portal. I am also an investor and trader myself. Forex has always been my favorite market to trade. And don't forget to follow us on Instagram, Traders Tax Pro, at Traders Tax Pro. Give us a follow. You'll get to see a bunch of my posts and little tips, tax tips for traders and investors, and so much more. Now, no questions will be answered during the presentation, just so things run smoothly. I don't want to stop, answer questions. I don't want to lose track. So we'll have a few moments at the end of the presentation where I'll select some questions to answer. If I don't happen to get to your question, if I don't see it, then you can contact me. Here's some of my information on the screen. Feel free to screenshot it, jot it down quick. My email, thomas@traderstaxpro.com. You can call or text me at 1-833 887-7648. Or you can visit my website, and I do have a live chat option. Just bear in mind, I do control the live chat on my website, and I do get the notifications. However, if I'm helping a client or if I'm not available at the time, it does ask that you just leave your email address, and I'll get back to you that way. All right, so let's hop into funded Forex first. So funded Forex, what is it? So basically, if some of you out there trade Forex and you aren't sure what funded Forex is, there's a bunch of prop firms popping up everywhere across the internet, and they are providing people with funds to trade with. So you take a challenge, which is a test provided by a prop firm, and if you pass it, you're awarded with a large trading account. Any of the profits that you realize on that trading account, you keep a percentage of it, typically majority. Read more on Traders Tax Pro. So on my website, I do have a blog post. It's the only one on my site at the moment, and it is all about funded trading. I will let you guys know that there is a prop firm that I suggest everybody take a look into if they haven't already. They're called the Funded Trader, and I am actually going to put a link in the chat, or Emmanuel is going to put a link in the chat. So this link will allow you to sign up for a challenge with them with a discount, with a special exclusive discount through my link. And, you know, take the challenge. If you pass it, you'll have a funded account. All right. So the tax classification of funded traders. You are considered an independent contractor for the prop firm. You are conducting contractor work for the prop firm. There are typically people who will report as a sole proprietor, or they've formed an LLC, a single member LLC, which that activity is simply reported either way as a sole proprietor or an LLC on a Schedule C with your individual tax return 1040. In order to report Schedule C as a funded Forex funded trader, you must have conducted business activity and actively work as a funded trader. If you have not become funded yet, you may not be in business yet. Staying organized. So as a funded Forex trader, you want to ensure that you keep record of all of your costs incurred. This is why I always tell everybody, bookkeeping is extremely important. And this is something that goes for all business owners, not just funded traders. Bookkeeping is a key to success. There is no way that a business can stay successful for long without proper record keeping. Keep records of all of your invoices issued and all payment receipts received. What this means is, so basically as a funded trader, let's say you traded for the month and you made $10,000 and you have to invoice the funded trading prop firm for your $10,000 payout, minus their cut, obviously. But I always recommend that regardless if you receive any form of a 1099 at the end of the year from the funded firm, that you keep all of your receipts and invoices. This is part of being organized. Keep time records for activity and business usage of expenses and equipment. Obviously, this is important for tax purposes. Expenses are deductions, as are equipment purchases. So Traders Tax Pro will be releasing a custom funded trading journal to help you with your activity record keeping. Basically, I speak to a lot of clients, and when I recommend that they keep a journal of their activity logs, which means basically your usage, or kind of like a punch-in card for a job. You basically record the amounts of times you're doing something related to your business. This helps a tax professional or accountant better understand your usage as a business owner for certain expenses, for certain things. So contact us to find out more about that. Currently, they are in the process of being made. So they are not available yet, but once they are released, it will be posted on my Instagram and also on the website. So before becoming funded, any costs incurred prior to being a funded trader may be classified as startup costs. Be sure to keep track of all of your expenses incurred while in the process of becoming a successful funded trader. These expenses will be accounted for only after you are, quote unquote, open for business, aka you are a successful funded trader and due payment. Startup costs will either be expensed, capitalized, or both. What capitalized basically means is that cost is split up between a certain amount of years. In the case of startup costs, it would be 15 years or 180 months. So the deduction of startup cost, so basically, once you become a business and you have all of your records showing your startup costs, you are able to deduct up to $5,000 automatically on your tax return in your first year of service. Now, if your startup costs are over 50,000, the amount, so that max of 5,000 is reduced dollar for dollar on anything over 50,000. As a funded trader, you guys really shouldn't have anywhere near $50,000 worth of startup costs. The remainder would be capitalized or amortized. Basically, what that means, so startup costs which are to be capitalized will be amortized, which again means expensed over 180 months, which is 15 years. So an example, if you have $10,000 in startup expenses amortized, approximately $55.56 per month or $666.72 per year would be able to be deducted on your tax return for startup costs. Now, a little bit about independent contractors. If the work that you provide, if the work is provided for a U.S. firm, then you should receive a 1099 NEC, formerly known as a 1099 miscellaneous. It was changed a few years ago to a 1099 NEC. Basically, that will show all of the money you've made from an employer that has employed you as an independent contractor, and you won't receive this 1099 if you're a funded trader from a firm located outside of the U.S. So, for example, FTMO, they probably don't and won't file a 1099 because they are not required to. They are not in the U.S. So that is why it is even more important to keep all of your paperwork, your receipts, your payouts, etc. So expenses as a business owner. The IRS classifies an expense as being any cost incurred which is ordinary and necessary. So this is something you'll hear all the time. This is something that is really taught in the profession of taxes, is these two words, ordinary and necessary. It is very important to realize that an expense is only deductible if it is ordinary and necessary for you to do your job. So we'll give you an example of something that's not deductible versus something that is, based on being ordinary and necessary. So let's say you wanted to purchase, or you did purchase contractor gloves as a funded trader. You cannot expense those gloves as a funded trader on your tax return because contractor gloves are not ordinary and necessary for funded traders. Now, let's say you purchased a TradingView subscription as a funded trader. That is an expense that is deductible. Why? Because it is ordinary and necessary for a funded trader to do their job. So we'll go over some of the more common expenses and deductions for funded Forex traders. So one being the home office deduction. If you conduct your work in your home, we'll go over that on the next slide. Self-employment tax deduction, the internet and cell phone expense, education expense, subscription expense, and the Section 199A deduction. So home office deduction. And again, a lot of these can be geared toward other business owners. It doesn't have to be funded trading. Again, we're going to be obviously speaking about funded trading, so that's why I'm going to reference it. But a lot of these deductions are also available for other business owners. So the home office deduction. The term home includes house, apartment, condo, mobile home, boat, or similar property which provides basic living accommodations. Qualifications for the home office deduction. Must use the space in your home exclusively and regularly as your principal place of business. The space does not have to be marked off by a permanent partition. So if there's a part of your home, let's say an area next to your living room, that is your little office space, and it is used exclusively and regularly as a funded trader to do your job, then that portion of your home may qualify for the home office deduction. So let's break it down a little further. So exclusive use. exclusive use, the space will not qualify if it is used for both business and personal purposes. Regular use, must use the space on a regular basis, not just occasionally. Business use, must use the part of your home in connection with your trade or business. Your home office may qualify if you use it exclusively and regularly for administrative or management activities. If you have no other fixed location where you conduct substantial administrative or management activities, then this space may qualify. Again, there's a lot more that goes into it. You'd be able to speak to your tax professional about the home office deduction if you're not sure, and we'd be able to help you out with that. So to calculate the home office deduction, there are two ways to calculate it. The first being the simplified method, which is a deduction that is equal to $5, which is multiplied by the square footage of the area used in your home, up to 300 square feet, which is a maximum deduction of $1,500. Then we have the actual expense calculation. And basically to do this, you must find the percentage of your home which is occupied by your workspace, which is your office square footage divided by your entire home's square footage. You may deduct a percentage of the costs incurred, such as rent, home insurance, security, utilities, etc. So once we find that percentage, so let's say that your home office was 100 square feet and your total home was 1,000 square feet, that is 10% of your home being used as your home office. So 10% of your rent, 10% of your home insurance, etc. Now, please note again, there may be much more involved in determining your eligibility for this deduction, and this can be determined by your tax professional. It's always a smart move to speak to a tax professional if you're not sure. All right, the self-employment tax deduction. So, self-employment tax is imposed on self-employed individuals. Basically, self-employment tax includes Social Security and Medicare. So we have 12.4% for Social Security and 2.9% for Medicare. So when earning wages at a job, the employer will cover half and you cover the other half. So as a self-employed individual, you need to pay it all. For the purpose of calculating your, this is used. So basically this deduction is used for the purpose of calculating your income tax. You can't deduct you can deduct 50% of your self-employment tax during tax time. So you pay your self-employment tax while filing your tax returns. You're able to deduct 50% of what you paid off your tax on your tax return, so that it essentially lowers your taxable income for tax purposes to compute what income tax you owe. All right, internet and cell phone expense. So it is impossible to be a funded trader and not use the internet. Obviously, that's where you execute your trades, where you analyze your charts, you use the internet. So who doesn't have MetaTrader downloaded on their phone today? If you use your internet or cell phone to carry out your duties as a funded trader, then you may be able to write off part of your bill as an expense. For example, if you use your internet 60% of the time for your funded trading activity, you may expense the total cost of your bill, 60% of it for the year. So this is obviously assuming that you were conducting this activity all year round, because if you weren't, then obviously we'd have to break that down a little bit further. But for simplicity purposes, we will say you used it all year and 60% of the time you used your internet or your cell phone. We'd be able to deduct 60% of that yearly cost as an expense. Again, the Traders Tax Pro Funded Journal, which will be coming out soon, will be able to track your usage. So what I mean by this, where did I get 60% from? If you are able to track how much time you spend using your internet, then we'd be able to calculate how, what the percentages of time that you use that internet throughout the year for business purposes. All right, education expense. So in general, this does obviously none of these are specifically for funded traders, but this is another expense, and this can go for any business owner. So basically, any courses or classes taken to improve your skills as a funded trader. If you were I don't know, a painter, if you have any classes or courses taken to improve your skills as a painter. So basically, if you take a class or a course that betters you in the job that you're doing, or relates to the job that you're doing, the business that you own, you can deduct it as an education expense. The education must be directly related to the work you perform within your business. For example, let's say you took a yoga class as a funded trader. That is not an expense that you can deduct. However, if you took a course to strengthen your strategy as a funded trader, then this would be a deductible expense. All right, subscription expenses. So obviously for funded traders, something like TradingView. Who doesn't use TradingView for their charting and analysis? I would think it's weird if you don't. Everybody knows what it is. Everybody uses it. So you can write off your subscription fee as a business expense because it is ordinary and necessary for you to carry out your job. And the Section 199A deduction, also known as the QBI deduction. Basically, so QBI stands for qualified business income. So you may be able to receive up to 20% of a deduction on any of your qualified business income. Funded trading is considered an SSTB, which stands for Specified Service Trade or Business, which means that in order to qualify for this deduction, your total taxable income must be less than $164,900, or if married, filing joint, $329,800. This deduction does expire after 2025. There is no word of if it's going to expire permanently or if they will extend it, but it's a nice little deduction for small business owners. All right, so estimated taxes. Estimated taxes include your self-employment and income tax. So as a business owner, as a self-employed individual, as a independent contractor, you don't have somebody taking the taxes out throughout the year for you. So that is your responsibility to make these estimated tax payments. So you make payments based on your earnings as a funded trader. My recommendation, obviously, there's other professions out there or other business owners who can project their income for the year. They can project what they're going to make for the year, and therefore they can give an estimate of what they're going to pay in taxes. But as a funded trader, it's not always that clear. So I always recommend that you pay your estimated taxes based on what you've made each quarter, and never forget about your state. If you have a state that has income taxes, there are a select few states who don't pay or don't require their residents rather to pay income tax. Then don't worry about your state. But if your state does have income tax, don't forget about it. So estimated taxes are paid on a quarterly basis. The first quarter, which is any earnings from January 1st to March 31st, the due date for that payment is April 15th. The second quarter, which has a date range of April 1st to May 31st, the due date is June 15th. Third quarter, June 1st to August 31st. That due date is September 15th. And then the last quarter of the year, September 1st to December 31st, that payment is due January 15th of the following year. So business entities as a funded trader. These are the obvious and most common. If you do decide to look for a business entity to own, then obviously most people will go for the LLC. But if you don't have an entity formed, you are simply a sole proprietor, which is fine. Your business activity is still reported on your individual tax return. The same as a single member LLC, you are considered what's called a disregarded entity, and your business information or your business financials will still be reported on your tax return via a Schedule C on your individual 1040. Now, LLCs do have the option to elect what is called S Corp status, which can or potentially provide you with further tax savings. However, we only recommend that you elect S Corp status once you are successful and consistent and making above a certain threshold, typically around maybe $150,000 as a funded trader. So, talk a little bit about Forex personal accounts. The tax treatment in the US for personal Forex trading is completely different than funded Forex trading. So people don't understand that what we've just spoken about, so funded Forex trading, that is treated as business activity. You are a contractor for the firm. Your trades don't matter. We are not reporting your trade or your trades rather as a funded trader. We don't care about your gains or losses as a funded trader. We care about the money that you've made as an independent contractor, your payouts from the prop firm. Now, on a personal account, we do want to know your gains or your losses to report, because your gains or losses on a personal account are reported completely different than funded trading. So the tax treatment in the US for personal Forex trading accounts is completely different than funded Forex trading. I'll say it again. Therefore, you should never intertwine the two, or you may have or create a big mess come tax season. So you never want to intertwine your profits from funded trading and personal trading because they are reported differently. They are two separate matters and are treated so on your tax return. So Forex trading, Section 988 treatment. By default, Forex trading on a personal account will have gains and losses treated as ordinary. So what this means is any gains will be treated on your tax return and taxed at your ordinary tax rate. Any losses are deductible up to the amount of other ordinary income. There is no loss deduction limit as seen with stocks or crypto, which is a $3,000 maximum loss deduction per year, which you are able to carry over the remainder for stocks and crypto. However, there is no carryover for Forex losses. So again, you can deduct your full loss on a personal Forex account up to the amount of other ordinary income. If there is no other ordinary income to offset with your losses, then those losses are wasted and cannot be carried forward to any future years. So, using crypto for Forex activities, what I mean by this, let's say you use crypto to fund your personal account or to withdraw from your personal or funded Forex accounts. You're creating an extra taxable event which needs to be reported on your US tax return. Each time you dispose of cryptocurrency, whether it be for a different crypto or for fiat, which is, US dollar, that is reportable and is a taxable event, even if it's minor. So if you're not keeping good books or good records of all your transactions, you may be creating a disaster which needs to be cleaned up by a tax professional and is not cheap. So that is why I always let everybody know, keep good records, keep clean records. So what we mean by this, let's say you fund your personal Forex account using Bitcoin. Let's say your broker provides you with a 20% increase in funds in your Forex account if you use Bitcoin or something. So you decide to hop on your phone, go to Coinbase, purchase some Bitcoin so that you can use that Bitcoin to fund your Forex account. You just purchased Bitcoin, which is fine. Buying Bitcoin is not a taxable event. But as soon as you disposed of it, which means as soon as you funded your Forex account, again with US dollars, you just took that Bitcoin and took it for US dollars again. That is a taxable event. You got rid of the Bitcoin. That is a disposal transaction. So now we need to figure out the basis, which is how much you paid for that Bitcoin, and then how much did you make or lose on the transfer of that Bitcoin, getting rid of it, the disposal. So regardless, people don't think about this when they use Bitcoin as an intermediary. They don't realize that this is still a taxable crypto transaction. So always be careful, because crypto does make a tax return much more complicated. And if you are not a good bookkeeper yourself, or if you are not a good record keeper, then things are going to be a mess. And crypto is, or can be, a nightmare on a tax return. So cryptocurrency users, traders, and investors, if you are involved in cryptocurrencies, reach out to me, and I can obviously help you with your tax returns as well. Cryptocurrency transactions have different tax treatment depending on the activity surrounding those transactions. So whether it be you buy and sell cryptocurrency, whether it be you mine, you stake, you've received airdrops, you yield farm, whatever. Everything has a different tax treatment. So getting into some of the discounts I am offering to clients today, or new clients rather. So tax preparation, if you need your tax return prepared and filed, we are offering $50 off for anyone who books an appointment within the next week. I am going to actually increase that to $75. Why? Tomorrow is my birthday. So for my birthday week, I will give an exclusive extra $25 off of that 50 already. Tax prep fees will be increasing as the busiest part of the year, or the busiest part of the season nears, March and April. Bookkeeping. So here's some information on bookkeeping for funded traders and the specials that I am running. If you have any questions, feel free to reach out. I will give the stage to Emmanuel Fest. He's got a special discount for viewers today, so let him further explain that. You're muted, Emmanuel.
Yeah, thank you so much, Thomas. I mean, this is so resourceful. Guys, if you have questions, make sure you are typing your questions. Thomas is going to be answering your questions. And in case you are watching this and you are not one of the Forex disciples and you want to learn how to trade Forex the real way, the better way, okay? I mean, there's no better day to sign up today for my 6 months coaching and mentoring program. And today you get 80% off, 80% off. So all you have to do is go to www.theforexapostlementoring.com and you claim your 80% right there. So I'm not going to take too much time of Thomas today. It's all about tax. So guys, let's see your questions. So begin to post your questions, and Thomas is going to answer your questions as we go along right on this presentation. Are you done with your presentation?
Yep, it's all done.
Great. So while we are waiting for more questions, I have some questions here. So the first one says you talk about the deducting startup cost for Forex funded Forex traders.
Mm-hmm.
So deducting startup cost, the maximum is $5,000. Could you expatiate more on that?
So basically, you are able to deduct in your first year of business, your first year in service, up to $5,000 on your tax return as a startup cost. So let's say you have $10,000 in startup costs when you officially go into business, when you officially go into service. So you are able to deduct $5,000 right away on that first tax return that you are in business. The remaining $5,000 of that 10 would need to be capitalized, which means it would be amortized over the next 15 years. Okay. So it will basically be broken up into 180 months, and you will be allotted that amount per month until the 15 years are up.
Oh, I see. Then you also talk about the maximum loss maximum loss, so that you cannot write off more than $3,000 maximum. So let's say, okay, you trade a forex and in a particular year you lost more than 3,000. So what happens to the rest of the loss?
So the max loss of $3,000 only applies to things like stocks, crypto, anything with a capital gain or capital loss. Forex trading does not get that treatment. It's a separate tax treatment for Forex, for regular Forex trading on a personal account. You are able to deduct your full losses in the year that you have realized those losses, as long as you have other ordinary income to offset. So if you have $50,000 that you've made in other ordinary income, and you have $20,000 in forex losses, you're able to deduct that full $20,000 against your $50,000 of other ordinary income. If you only made $10,000 in ordinary income for the year and you lost 15, which means you have an excess of $5,000 in losses on your personal forex account, you'd only be able to write off up to 10,000 off. You're only able to deduct up to the amount that you have in other ordinary income.
I see, I see, I see. So, guys, as we are tidying up this, if you have questions, I know some of you have questions. Make sure you're typing in your questions. Also, Thomas has a special for us today. So, if you decide to book or hire them to do your bookkeeping, I'm telling you, it's a lot of headache. I can testify to that. Personally, I'm hiring Traders Tax Pro to start taking over my tax and even my bookkeeping. So make sure that you visit that website. You can chat with him live there. And he has said that this offer, this special offer, is only valid for when?
1 week.
1 week, 1 week from today. Okay, 1 week from today, you can follow Thomas at Traders Tax Pro, even on Instagram. So if you have a question, guys, begin to type in your questions as we begin to round off today's show. It's not a long show, so make sure that you take advantage of this, most especially you're in the US. This concerns you. If you are a trader in United States, you are a forex trader, you're dealing with cryptos and all those, you need this. You need this. Now, I have another question that just came in here, that self-trading and funded trading should be treated separately. You made mention of that during the course of your presentation. What does that mean?
So keeping it separate from your personal trading activity, I assume?
Mm-hmm.
Is that the question? So
Correct.
what I just basically mean, so you're making money from your personal Forex account and you're making money from funded trading. You just keep those activities separate. Let's say you made for the year $10,000 on your personal Forex account, and you were paid out $50,000 from funded trading. We don't put those together. We don't record keep each of those put together, so to speak. Those are two separate taxable events. They're treated completely different. One is a business activity, which will be reflected typically on your Schedule C, whereas the other one is considered ordinary income and will not be considered as part of your Schedule C activity. So it's very important that you keep record of all your different, especially and moving outside of the box of just Forex. Let's say you trade crypto or you invest in crypto. You trade Forex, you have a funded Forex account, you have some stocks that you sold off. Each of those should be kept separately and never kept together. So when somebody comes to me and they said, "Oh, I invested in for the year and I sold off some stocks, made some money in Forex, I funded, I was a funded trader, and I have some crypto, and I made, $15,000. So can you do my taxes with that?" We need to see everything separately. We need to know every bit and every part of it as a separate piece of the equation, so to speak. You can't just say I did all of this and this is what I did. We need all of your records for each activity accordingly.
I see. I see. So, guys, as we begin to round off, please kindly type in your questions, or some of you are messaging me on WhatsApp. It's okay, but if you could just type it right on the, if you're on Facebook, you can type it on the chat window. We'll be able to get it. And if you're on YouTube, you can type it right there on the at the comment section. And of course, Traders Tax Pro has a YouTube channel. You do, right?
No, well, I do have one. There's nothing on it yet, but I'm in the process of working on things. There's a project I'm actually working on now for a video, specifically for cryptocurrencies. But it is tax season, so when I have time, I get to work on that. But it should be relatively soon, before when
I
I come
know
out.
it's a lot of work to keep up with a YouTube channel. That's
Yeah.
good. Then I think the last question I have here is, okay, your clients. So how do you deal with them? Do they have to come to your office, or you deal with them virtually? So how do you do it?
Everything is virtual. So once you schedule an appointment, you'll basically have a one-on-one call via Zoom with me. And we go over your entire situation. I'll be able to provide you with a quote for my services. And then we move forward from there. If you decide to move forward, then you are able to uh, create an account on my website, my client portal. This is where you will provide me with all of your information, all of your documents, and is also where you'll be able to pay any invoices or e-sign any of the documents that I need your signature for. So nothing is in person, everything is fully virtual.
Awesome, awesome. And of course, happy birthday to you. So tomorrow is your birthday, and Thomas is giving us $75 discount if you hire him to do your tax, right?
Correct. If you book within the next week, I'll give you a discount of $75 off your tax return.
Awesome, awesome. Thank you so much. So once again, guys, this is Thomas Traders Tax Pro website. Make sure you take the screenshot. Make sure you go to the website. I visited the website myself, and of course, I was able to chat with him. In fact, we met on Zoom. So the same thing he can do with you, because it will be different situations. So you'll be able to schedule with him, and you'll be able to answer all your questions. You'll be able to answer all your questions. Once again, Thomas, thank you so much for your time. I know your time is so busy, but yet you still, attended to us
No
today.
problem.
I really appreciate, bro.
No problem.
Yeah, thank you so much. So, guys, if you have any question, you can forward your question to me. I will send it to Thomas, or you can just go straight to his website and make sure you take up the special promo that he has going for his birthday. I mean, if you missed that, I'm just so sorry for you. Okay. So once again, thank you so much. And I will see you guys at the top. Thank you. God bless you.
See you, everybody.